Hi, everybody. Welcome to the Orange Wheel podcast, the podcast where we support business leaders in understanding Bitcoin and the monetary transition. I'm joined today by Alicia Wong. Alicia is with Canaan, the Bitcoin miner OEM out of Singapore, as well as a Bitcoin Treasury company itself. So really excited to kind of go into some exciting topics today covering Bitcoin Treasury, Bitcoin mining, outlook for 2026. Alicia and I had the opportunity to meet through the European Bitcoin Energy Association at the AGM held earlier this autumn in Germany, and it was a really great experience to connect with folks like Alicia there. So Alicia, how are you doing?
I'm good, thank you. Thank you for having me. I'm really excited to
Yeah,
be here.
my pleasure. Yeah. So it's been a while since we caught up, Alicia. But maybe for the audience, it would be great if you maybe present yourself and Canaan for those who might not be familiar with the business.
Absolutely. So my name is Alicia. I lead government relations for Canaan out of our global headquarters in Singapore. Canaan is a Bitcoin mining hardware manufacturer that is really moving towards becoming an energy infrastructure solution provider end to end. For us, Canaan was founded in 2013. We were the first to bring to market an ASIC miner to miners out there all around the world, and that really, I think, skyrocketed or accelerated the whole mining industry. And we can go into that a bit more. As for myself, I'm born and raised here in Singapore. Probably the least crypto bro looking person that you'll see in our space. But, day to day, I basically sit at the intersection between three public policy, energy systems, and high performance computing. So I spend a lot of time, helping policymakers, utilities, regulators understand that Bitcoin mining has really evolved from mysterious computers sitting in a warehouse to really more serious energy infrastructure moving forward. Yeah.
Very cool. Awesome. So maybe before we go into the meat of it, it'd be great to just hear up front. I mean, what excites you the most about what Canaan is doing and building right now?
Okay, well, I think what really excites me the most is that we're actively working to change the story around Bitcoin mining. And on one side, I think we're pushing really hard on home mining. So our long-term ambition is that 20% of the global hash rate one day will come from individuals or families around the world. That might sound pretty bold right now, given where we are today in our current with the current global hash rate. But we believe that if hash rate only comes from just a handful industry players, then something essential about Bitcoin is really lost. So that's one thing that we're really working very hard on. Yet on the other hand, on the other side of the spectrum, we're also continuing to work with these industry partners to, integrate mining more directly into our real world energy systems. I think moving forward on the industrial front of Bitcoin mining, I think the way forward is really about managing that energy cost and going straight and reducing that is really the only way. I think moving forward is about integrating that into our energy systems, right? And making Bitcoin mining kind of go from an energy problem, right, that it used to be viewed as, to more of a tool that we can use to solve our future energy problems.
Awesome. Yeah, I think both those aspects are really positive impact stories, right? I mean, first and foremost, the kind of greater decentralization of Bitcoin mining. I think that's obviously one of the major concerns within people in the Bitcoin community, is they see it as too much centralization amongst just a few pools. I think was a very does pose risks to the ethos, at least of Bitcoin, if not the actual security. And then, I think also, I'm personally very excited about the integration into energy systems. It's part of a lot of what Orange Wheel is really focusing on right now here in Europe. So I'm excited to kind of delve into that a bit deeper. But yeah, I think certainly I think there's a growing appreciation for the idea that just pulling directly from the grid and having large scale operations is going to become less competitive over time. So cool. So with that, let's talk a little bit about your Canaan's market outlook, as well as kind of touch on some of the topics of like geopolitics and so forth. So firstly, how does Canaan view the global Bitcoin mining landscape heading into 2026? And what are the most important trends that you're seeing in the market at this time?
Right. I think, I think heading into 2026, we'll see Bitcoin mining become less of a cheap electricity arbitrage game, and much more about, energy infrastructure. So the first big wave after 2021 was mostly about relocation. So like in less than a year, we saw about 70% of the global hash rate move out of China, and had to land somewhere else around the world that had cheap electricity, right? So for us, we believe that the next wave is about integration. So integrating into your real world energy systems, and the main trends that we're really watching out for pertaining to this is really the professionalization of operators. We believe that we'll see fewer hobby warehouses, and more players who think a bit more like energy companies. So modeling lifetime economics, optimizing uptime and managing your risks. With tighter margins, we'll also see higher expectations on the ASICs front. So after the halving, every watt of electricity counts. So that really is driving up demand for highly reliable, more reliable machines, really. Better cooling systems and smarter firmware. And of course, I think the third trend that we're looking out for is really institutional and government interests. Governments and utilities, they're starting to slowly shift from, what is this Bitcoin mining thing to, a bit more practical, a more pragmatic outlook on it, which is like can this help my grid or my region, right? And miners are really beginning to be seen as a programmable demand rather than just, crypto speculators.
Yeah, really cool. And recently, I was talking to a Bitcoiner who's an electrical engineer with an engineering firm in Denmark, and
Right.
he was kind of advising on a bachelor's thesis for the Technical University of Denmark for a few students, and they were basically looking at exactly this topic of how can Bitcoin mining be integrated into the transmission system in Denmark
Yeah.
to help resolve grid congestion and so forth. So it's great to see that. I think you're right. We're starting to see like
They're starting
the
to pick up,
beginnings,
right? Yeah.
yes, of this
And
kind of
understand.
communication to policymakers. Really cool. So I think maybe you already kind of touched on this a little bit earlier, and maybe you've hinted at it at least. But do you see greater geographic decentralization or more centralization? I mean, at least at the nation state level. From what I understand right now, since the exodus out of China, a lot of that mining hash rate went to the U.S., and the U.S. is now like a major dominant player. So do you guys have a perspective on which markets will be growing and what that means for national decentralization?
Right. Yeah. I think when it comes to, to your point, right, whether are we decentralizing or is there further consolidation, I think we see it as both happening at the same time, but just on the like different layers. So perhaps at the company level, right, at the operators level, ASIC efficiency really rewards scale. So we'll see bigger operators who can negotiate better power contracts, finance your equipment more cheaply, run like 24/7 operations. So you'll definitely see further consolidation, right, among the industrial Bitcoin miner space, right? Especially with price volatility coming forward and hash rates going up, we'll see a bit more consolidation on that front. But at the geographic level, I think we'll see growing decentralization in different markets kind of picking up, right? With geopolitics, regulations, energy prices, hash power is really being distributed into many different regions. So like you mentioned, North America continues to be a very important anchor, but we see other regions as well in the Middle East, in Africa, Asia, Europe, hopefully. We'll go a bit deeper into that as well. So yeah, we'll begin to see. I think what we're seeing is really a pattern of globally distributed yet locally integrated clusters. So distributed in the sense of where our hash rate is live, but deeply integrated in terms of with the grids, with your local communities and your local regulations.
Cool. No, that sounds like a really great vision for the direction that we're heading towards. It sounds like one that's much more it gets the best of both worlds in terms of localization benefits are happening locally, but a
Yeah.
decentralization at a global level. We mentioned the industrial miners. Certainly, there's been a lot of news in the last year or so of the big scale, at least the large publicly listed ones that are very transparent. I'm thinking like Riot, Iron, really making this pretty dramatic pivot from Bitcoin mining to AI, high performance compute. So I'm just kind of curious as a follow up with that in mind to kind of what you were saying about the industrial miners continuing to get like large scale operations in place. Do you sort of see it being other pure play Bitcoin mining companies that are continuing to do that, or what's your perspective in light of this kind of pivot amongst some of the larger players?
Yeah, I think Bitcoin mining is really kind of like a rehearsal for AI compute that's to come. So we believe that Bitcoin mining kind of comes in and makes a very strong economic case as your first anchor, tenant at any sites to, kind of test out project economics, get your infrastructure up and ready, and in future ready for for the future data center customers or when your grid needs that capacity. So I think to your question, right, whether Bitcoin miners, we're going to continue seeing more pure play. I think we believe that it's really moving towards a more hybrid situation in the long run, right? But I think in the medium term, just setting up that infrastructure itself, there's a long way to go, and Bitcoin mining can come in to support that.
Okay, cool. And so by hybrid, do you mean like actually co-located at the same facility in terms of
Yes.
integration?
So
Yeah.
I think we'll see across the spectrum, right? You'll have people co-locating AI data centers with Bitcoin mining at the same site, or it could be, at the power generation front, right, where you have, your Bitcoin mining just a modular deployment on site with your power generation, be it renewables, gas.
Very cool. All right. So you talked a little bit on the decentralization that you're seeing occurring. Which regions do you really see the next wave or being very particularly interesting in the next wave of decentralization?
Yeah, so I think, like I mentioned, right? So North America will continue to anchor, I think, in our next wave, especially in parts of America where we see, energy policy and digital infrastructure strategy kind of line up. But I think the next wave of, growth in new markets should include Europe as well. I think when we think about, where next for the next wave, we look out for a few key ingredients. So this would be, strong renewable resources, like and markets or regions that are blessed with just good natural cooling, regions or markets that have underutilized gas or hydro energy sources as well as I think at the government level, at the policy level, a government that is serious about digital infrastructure as a whole and not just, curious about Bitcoin and what Bitcoin mining can bring, instant returns, right? And so from that perspective, I think Europe really does tick off a lot of that boxes. Europe, and I think Europe already has a lot of currently, wind and solar congestion is already a problem. I think it was the EU Commission who forecasted that I think by like 2030, 2040, you're looking at some 310 terawatt hours of renewable power curtailment, right? If we don't invest in like your grid infrastructure upgrades. So I think there's definitely a case for Bitcoin mining to come in to kind of help alleviate that situation. I think other markets as well, like in Asia, like Japan and Canada, they have advanced grids but still have pockets of underutilized energy, as well as in Middle East, right, where they're building, large energy bases and data centers, in parallel. Yeah.
Very cool. Yeah. So, I mean, I think Europe is particularly interesting. And as I mentioned, we at Orange, we've been really focusing on the Nordic markets and the grid congestion and how Bitcoin can alleviate that. So I think it's a fascinating space. And certainly there has been I think, a change of attitude towards, as you said, like Bitcoin being seen as something that is like an environmental negative impact on society versus actually having a potentially quite positive impact on the energy system overall, especially when renewables are involved and the carbon footprint is quite low. You mentioned Canada. So I'm here in Canada right now, actually. I'm in Western Canada in Calgary, which is the kind of oil and gas heartland of Canada. And I know natural gas prices are really very low in this market right now due to export constraints, as well as, a lot of associated gas coming from oil. So it kind of ends up being just this byproduct. So there had been quite a lot of Bitcoin mining being deployed into Canada. I understand talking to some folks here that they find that the prices that Bitcoin miners will offer purchasing the power at is not as competitive as AI and other types of data centers. But what's your view on the Canadian market today? How do you see this opportunity and also these kind of skid-based platforms that go out to flare gas sites? Is this kind of seen also as a long-term opportunity?
Yeah, definitely. I think Canada makes for a very interesting market. Definitely, particularly, in regions where we have, like you mentioned, right? So a lot of stranded natural gas. We do see real opportunity there, but I think it's more like in the medium term. So, gas-based mining, we see it more as a transitional solution. So in some cases, right, that includes, like you mentioned, capturing the gas that would otherwise be vented or inefficiently flared and using that for controlled power generation done properly that can reduce your methane intensity while providing reliable flexible energy for early stage compute like Bitcoin mining. Why I mentioned that it's a medium term rather than a long term, because we don't see flag gas as a long term primary energy partner. Right, the longer term direction I think in Canada is likely to be renewables and storage, right, and then it's supported by gas for reliability. So in this transition, Bitcoin mining kind of acts as that early flexible customer, right, that helps to underwrite new infrastructure that is being built, right, and absorb that variability as we get cleaner energy systems into the grid in Canada. Yeah, there is opportunity, I think, overall in the market, but we see it we try to view it from an energy perspective. Yeah.
Awesome. Okay, really fascinating to see the kind of market outlook and the regional perspectives that Canaan has, and certainly of interest to me, being focused on Europe and to some extent also in Canada. So it's great to hear that those are interesting markets from your perspective. But let's shift gears now and discuss a bit more on the hardware side. So Canaan recently released a new model, the A16, and I think it was quite well received in terms of its technical specifications and price point and so forth. But it'd be great to hear from you. I mean, how do you see the biggest leaps forward in this latest generation of ASIC chips?
Right. Yeah, I think for us at Canaan, I think the biggest leap is not necessarily in a single chip spec, right? It's really been a big change in how we design the entire machine as part of an energy system. I think that's really one of the big points that we've changed in our whole engineering process, right? It's really in the way that we frame and think about machines moving forward. But yeah, we continue to push ASIC efficiency at your chip level, right? For our latest generation, we really focused on three things. So for us, it's really about the thermal architecture, redesigning that cooling path so that your air and your liquid cooling can move more intelligently through the machine, and that allows us to run hotter climates, right, or denser racks without sacrificing lifespan. I think power integrity and control was also something that we really looked at. So we upgraded, the control boards and power delivery so that we lose fewer watts to conversion and heat, and manage to keep our hash rate stable even under imperfect grid conditions, right? And I think we also really changed how we looked at reliability. Instead of looking at terahash per second, we're looking at lifetime terahash. So how can our machines kind of keep up, throughout how much terahash can we churn out throughout the entire design lifetime? So if I were to make it like an analogy out of it, it's like we're not trying to win a sprint. Like during the bull run, we're just trying to win that sprint. We're really thinking about it as how are we going to build a good marathon runner. I think that was really the big change for us in terms of designing this generation of the A16s, because I think from the customer's perspective, right, I think more customers these days are realizing that having a machine that just looks good on your spec sheet doesn't really cut it. It has to be able to handle heat, handle dust, voltage swings with your curtailment or uptimes, toggling it up and down, as well as in the real world operations, right, for many years to come. So for us, it was really a focus on reliability.
Yeah, I think it's easy for Bitcoin miners to focus on like the one or two KPIs, right? They're just like, okay, what's the efficiency? What's this? But I guess it doesn't necessarily translate into overall profitability if you're not taking into account all these other factors that you kind of bring up about reliability, uptime, cost for maintenance, and so forth. So I
Yeah,
think
and
that's
these insights, I think, really only come when you've gone through like one or two cycles, right? Oh, maybe not even two. I think you only just need one cycle and you realize that reliability is sometimes more important, if not more important, actually, I would say, than just your specs of chip efficiency.
yeah. And I guess there's also this, so is it implicit in what you kind of have said about these kind of longer lifetimes, thinking it more as a marathon? Is there an expectation that these chips will be in service for a longer period of time than some might initially imagine? Just given that there's this kind of belief that, every 2 years there's kind of the obsolescence rate of miners seems to be relatively fast historically. So are you seeing that kind of
Right.
pace slowing down in the future, or?
Yeah, I think so. I think, when we talk about, how we do chip development, there's only so much that we can squeeze out of a chip. I mean, going from 7 to 5, then 4, 3, going to 2, and then And, there's only that much more I think we can squeeze on the engineering front for your efficiency, how much hash power we can get out of the chip. So, and as we kind of integrate into energy systems as well, right, we have to ensure machines are a lot more reliable, longer lifespan, and with it, when you're integrated into energy systems, might not be running 24/7 at overclocking. You're gonna need to focus a lot more on the chip's ability to kind of, accommodate to different voltages at any point in time, right? When you need it. You need it to be more reactive and reliable in that sense.
Awesome. So we kind of touched a little bit on this, but how are these kind of advances that you kind of brought up, so really focusing about the kind of full lifetime view, the reliability, KPIs besides just simply efficiency on the face value of it? Is this changing the economics of site selection? And are certain sites becoming more viable that weren't previously?
I think the short answer is yes, that, with every time we get a new generation of hardware out, you kind of improve, there's higher efficiency, better thermal performance, and that really opens up, right, what markets that we look at in terms of, being able to deploy in hotter climates or being able to, pack on higher density racks without, extra cooling capex. But I think to me, the more interesting part of which opens up markets to be more viable is really on the policy front, right? The policy perception of how we understand Bitcoin. Hardware advances, they just mean technically we are less picky with where we can run. But if we really look at it on a first principles basis, right? In this world with so much wasted energy or curtailed stranded energy, how can we design our loads and infrastructure? And when we think of it from that perspective, actually, mining has always been very viable in a lot of these markets that have too much energy. But if policy is able to open up and kind of see Bitcoin mining as a flexible demand, a flexible energy consumer, then I think that will instantly change the map a lot more rather than just depending on, hardware.
Yeah, very cool. Yeah, I think you're right. So the hardware advances are kind of make certain things more about, but you think it's the integration with existing systems that is the bigger driver. Yeah, makes sense. Okay, and then what we touched a little bit about on this earlier, but what role do you see for ASICs in other industrial contexts? So could future miners become dual purpose, for example, both for mining as well as for heat recovery, or as we discussed a bit earlier, like integration within data centers?
Yeah, I think definitely moving forward, ASIC Bitcoin miners will continue to be focused on just generating Bitcoin, but what we do with that heat that's being generated is where we'll see a lot more differentiation, right? So as you mentioned, looking in Europe, there's a lot of opportunities in district heating, kind of reusing that heat that's being generated by these miners to heat buildings, provide district heating. So that's really interesting for us, or being used in even industrial processes, right? Replacing parts of your industrial manufacturing where you need heat. Can that heat be produced or provided for by Bitcoin miners that, have that excess heat? So I think that's all really interesting. And we do see, when we talk about integrating Bitcoin mining into the energy systems or into our traditional industries, I think that's where we're really looking at, and that's what we're really excited about.
Super cool. Super cool. It's funny you brought up earlier you said blessed with cold weather. And it's just not how most people in Canada or Northern Europe would talk about the winter weather here. So
Not blessed.
Blessed with cold weather. Yeah.
Sitting in Singapore, I think we count it as blessed.
Yeah, certainly. But no, it does provide an interesting opportunity here, though, too, right? Because heat is a valuable commodity in some ways, so here, right? So it does present those interesting dual stacked revenue opportunities. Cool. But let's then double click a little bit on this discussion on integration into energy systems, particularly with a European slant. So you've talked about Bitcoin becoming more of an energy play. So let's unpack that a bit further. What can that practically mean for energy infrastructure developers, utilities, independent power producers?
Yeah, I think when we say Bitcoin is an energy play, what we're trying to say is that, the real story behind Bitcoin is not just about the coin itself, but it's really the energy system behind the hash rate. So from an energy developer perspective, Bitcoin mining is, when you strip it all down, remove the narrative about Bitcoin mining in itself is a controllable, interruptible, and mobile industrial load that you can dial up or dial down almost instantly within a couple of minutes, and it's willing to be located at the edge of your grid, right, where traditional data center customers might not be ready to go just there yet. And I think bringing this back to Europe, this can mean, a few concrete things. So one, you're talking about monetizing, curtailed or stranded power, right? Where, wind or solar, they're being curtailed, miners monetize that access in the short term, which then improve your project bankability. Number two, I think it's grid support in renewable heavy regions. So because miners can shut down very quickly, they can help manage, frequency and congestion, acting as kind of that. We call it like almost, when I explain it to regulators or utilities, we describe it as like a safety valve for during periods of overgeneration. Bitcoin mining can be that safety valve for your energy grids. And to what we discussed earlier, right? The heat reuse and the district heating, brilliant reuse of the heat play of the heat, waste heat, I guess, from Bitcoin mining in Europe. And I think it's also really a pathfinder for your future digital infrastructure, which we kind of hinted at earlier as well, right? Like, is Bitcoin mining and AI compute going to be a hybrid play, or is it pure play for just Bitcoin miners? I think we see it as mining is really that first anchor customer at difficult sites, and then you prove your economics and you finance grid upgrades, and later you then share that site with AI or high performance data centers.
Any perspective on that? Yeah, really, really interesting if that's the way, because we certainly are seeing a huge build out of AI data centers. And if that trend continues, there'll need to be more and more sites. And I certainly see that synergy on the development scale, right? I hadn't really thought of it that way before, right? But kind of prove the concept, the economics, get some of the basic infrastructure in place. And then if you want to upgrade the site, then you kind of invest more for the greater climate control and water and cooling and so forth. So fascinating perspective. And I totally agree. I mean, the thing about Europe that's quite fascinating is just it's quite densely populated, a lot of integration of different types of energy systems together. So I think that kind of like already tightly integrated system presents quite a few interesting opportunities for further Bitcoin mining integration. All right. So we talked a little bit about governments and regulators and policy, and this is kind of your cup of tea, I guess, being that this is your formal role within Canaan. But do you believe that European regulators and the grid operators, the TSOs, are starting to understand Bitcoin and really understand the benefit here?
Yeah, I think for European regulators, I think, we can understand, they've traditionally always been taking a very cautious stance. I think moving any kind of policy development in Europe it's always a longer process, right? We understand that. But I think if we start, I think European regulators, they're starting to understand it a bit more, or taking a bit, although of course that's a bit more of a cautious approach, but they're starting to understand it from, when we talk to them, we talk about it from a first principles perspective, right? So if you're curious about decarbonization, if your focus is on energy security and, minimizing your social costs, right? Then what we tell them is that you don't have to love Bitcoin, you don't have to be a Bitcoin maxi, right? But you just have to be able to see the value in having a controllable, flexible load in your system that will pay for the power that it consumes. And on our job, right, as in the mining industry, we will bring the modeling, the real data, and communication with the regulators. So mining kind of in Europe, we hope that mining will move from being seen as this mysterious, new risk crypto speculators to something that's a lot more, of a regulated, measurable tool in your energy toolbox. And I think we're starting to see initial, momentum in that sense, right? And in certain markets.
Cool. So what has been the kind of new information that has helped to change some minds within these regulation bodies or TSO systems? Has it been more about the quantitative aspects, the modeling? Has it been more about simply providing more lobbying, I guess, classic lobbying? Or is it a bit more about them actually seeing real life cases in other jurisdictions, maybe, and seeing the results of those actual implementations, or maybe a combination thereof? But what in your experience has been the thing that's changed minds?
It's been a collective effort, right? Of course, there are a lot more papers, researchers that are looking into Bitcoin mining and the economic front, right? Modeling that out. How does that really help to offset, expenses on building up renewables? That's one. So more data is coming out. Public listed companies are also coming out and sharing a lot more information, right? About the data behind all these Bitcoin mining centers that we operate. I think there's also, to your point about, lobbying, I think the Bitcoin movement has been a very ground up, grassroots effort. All these events that we go to, and we invite politicians to come and join us, to listen, to kind of interact and understand where we're coming from. And we show up to the table, and we have that discussion with them, open conversations with them. And I think those two things, kind of put together, of course there's layered with, more macro, policy signaling from key markets, like in the US, where we saw, with a lot more policy movements on your crypto front that really enabled or opened up, right? I think all regulators around the world kind of set up a bit more and opened their eyes a bit more to the concept of potentially looking at Bitcoin mining away from just being, an energy problem, using a lot of energy to, this is actually something that we could utilize as a flexible load to front load development of sites before, we have AI data centers come in, right? Or as part of the grid balancing project. Yeah, so I think it's been a collective effort of all these different fronts, I guess. Yeah.
Yeah, no, makes good sense. And yeah, I forgot to mention, I think that's a big one, that kind of the US making kind of a pro Bitcoin, pro crypto regulation perspective more holistically. I think that's really moved the Overton window for the whole space globally, including for the mining side of things. So I think that's very positive. Even if you don't like the administration's other policies, it's I think it's good for our businesses, of course. What else was going to mention here? And I do wonder, I imagine that in the future that these, and I might be completely wrong about this, right? But I imagine there's some forums where TSOs from all over the world or from certain regions come together, right? And there might be some knowledge sharing from, if one jurisdiction does begin to implement this and have positive benefits, they can then share that within that industrial community as well, within those associations. So
Yeah.
I think that'll be fascinating.
I think moving forward, we'll definitely see a lot more, Bitcoin mining companies or digital asset infrastructure, however you want to call it, moving forward, kind of join these energy conferences rather than, traditionally we've always just been within our Bitcoin mining community space. I think there is movement and there is traction for us to kind of move and broaden that outreach that we do.
Very cool. Okay. Great to hear all of that. Let's move to the next section where we'll talk about Canaan's own Bitcoin Treasury strategy, which I think will be quite fascinating for many of our listeners. So Canaan has adopted Bitcoin as a reserve asset, its primary reserve asset, from what I can tell. Can you just share a little bit more about that decision and how it has kind of impacted the business since making that decision to adopt Bitcoin as a reserve asset?
Definitely. I think for us, adopting Bitcoin into our treasury was really about alignment and discipline, really. Alignment because we, as hardware manufacturers and infrastructure provider, we are building machines and infrastructure to really secure the network, right? And holding some of that asset itself, means that we share the same journey, the same long-term journey, really, as our customers and the broader ecosystem. Discipline, because, it kind of forces us to think in longer cycles. Once Bitcoin is on your balance sheet, you can't treat it as like a 3-month trading position. You have to, manage risk responsibly and be honest about that long-term conviction that you hold as a company. But I think at our core, there's also a very human element to it, in that, our founder, our CEO, is just a long-term believer in this network. NG, he has lived through, full bull and bear cycles, but yet he still chooses to, keep building in this space. Our corporate treasury policy is really consistent, I think, with that personal conviction that he brings to the table as well. So we still need fiat to pay salaries, buy chips, run factories. But, this very carefully sized Bitcoin reserve will send us we hope that it sends a clear signal, right, to the market that, we're not just a company that is really selling shovels during this gold rush, right, during this bull cycles. We're really taking some responsibility for, the long-term infrastructure of the network.
Yeah, and that's a good analogy, right? Because a lot of times people say it's just the only people that made money in the gold rush were the people that sold the picks and shovels. But if you're actually saying we too are buying into the long term viability of the digital gold in this case, then it shows this alignment, I think, as you said, right? So I think that's really, really cool. But then maybe to double click a bit on this, and this might be going a little outside your zone. I haven't looked at Canaan's financials in depth, to be honest. So I guess I could find this out. But I guess as you brought up, when you start holding Bitcoin as a reserve asset, it's less liquid than just cash or cash equivalents and so forth, unless you're willing to take a loss during down cycles. So has it kind of changed how the operations and investments of the business and, as you said, the salaries and so forth are managed? I guess, like, has Canaan been taking on or issuing other financial instruments to raise capital to finance those operations, or is it just that there's an excess free cash flow from operations that then a portion of that is put into Bitcoin?
Right. Yeah, I think for us at Canaan, our general principles is very simple, right? Apart from what we need to sell to pay for electricity and operations, we generally prefer not to sell. We'll hold Bitcoin. On our balance sheet, we've also recently included Ethereum as well. And so for us, we really believe that our main value creation comes from building and operating over the long term and not really from this short term trading. It may take, on what to your point, are we using any other financial tools? I think it takes time for capital markets, to really open up and provide those financing solutions. So I think we're working quite closely. We do see, we're exploring different financial tools as well, but I think generally, I think what I can comment on is really about, just this general principle and philosophy that we hold.
Yeah. So in general, right now, it's mainly just excess free cash flow that is being kind of stored in Bitcoin or a small amount of Ethereum, I suppose.
Yeah,
as well.
of course, and then
as opposed to
yeah, sorry.
as opposed to issuing debt instruments to finance the operations, right? It's more of a free cash flow based thing. Is that correct? Yeah. Okay. Cool. Have there been any really interesting learnings along the way since making such a decision?
I think our feeling is that, probably years ago, it was pretty much impossible, right, to kind of plug digital assets into your traditional finance in a meaningful way, simply because, the system wasn't ready or didn't have mature, custody and disposal mechanisms for digital assets. But I think what we've learned, right, we're very lucky to be in this time in this space at the moment, right, where things have really changed for major assets like Bitcoin, more mature trading custody infrastructure, Bitcoin. So which really means that Bitcoin can be treated as an asset class among others in a portfolio, right? But I think for mining companies like ourselves, right, I think the learning point, or what I guess in that sense, what we hope of in the future, what we can see is really, hardware and hash power itself can be a lot more, can be seen as a more fluid, more easily financeable asset class. Yeah.
And how have the capital markets viewed it? So if you look at kind of the investors in Canaan, the lenders, future investors, the capital markets participants more generally, what's been the response to this decision?
Yeah, I think capital markets they're still trying to figure out, right, how to really price hybrid companies like ours. So I think we're part energy business, and we're also part asset holder, right? So on one hand, the investors, they like operational excellence, so low unit costs, strong energy partnerships, high uptime. But on the other hand, they still have to account for, this volatility that we're experiencing in Bitcoin holdings, right? The Bitcoin price. So, but for us, when we make decisions as a company, we really don't start from what does the market want to hear from us. It's really about, their own operating philosophy and conviction. For Canaan, we were one of the earliest listed companies to hold Bitcoin in a compliant way and to accept digital assets as payment from customers. So we've really invested a lot into building that compliance, framework from very early on. So I think capital markets, they're still trying to figure out how to price that in general.
Okay. So there's kind of I don't know what the word is for it, but yeah, lack of consensus on the valuation side, and I think that's
That's
clear. Even for the companies like the MicroStrategies of the world, right, that are probably like the biggest flagship in the pure play space, right? There's still so much divergence of perspectives on the valuation of that business model, and then thereupon how to value such a company. So I totally see how it becomes somewhat conflicted when you have a classic operating business, and which might be a bit more straightforward on the valuation side within this hybridization. So that's quite clear, or clear as mud, so to speak, I guess. But on the other side, I'm just kind of curious. Like, was there did you see a rotation in investors once you became more? I guess if I understand Canaan, you've always been quite early on kind of the adoption of Bitcoin, integration into Bitcoin in the business. When it became more formalized, has there been investors that have kind of decided they're not aligned to this kind of perspective of Bitcoin as a reserve asset? They saw it much more as a product, and therefore were scared away when it was more clear that Bitcoin would be held as a reserve asset with more conviction. And maybe on the other side, were there new investors that came in that were especially interested in this approach?
Yeah. I think I might not be the best to answer this question, but I do know that, our team has been, our investor relations team, right? The capital markets team has been, working really hard, right, to go out and meet with different investors and speak with different investors. And I think overall we do see a bit more, I guess opening up to the concept and understanding a bit more interest as well, understanding a bit more of the business, primarily also because we have that primary operating business in hardware and infrastructure, right? And that kind of complements or very nicely leads into the Bitcoin treasury. Like I mentioned to you previously, right, when we're speaking off camera, it seemed to us like a very natural progression for us to adopt Bitcoin as part of our treasury. Yeah.
Cool. And so for other mining firms that may want to hold Bitcoin more as a reserve asset and see it not only as a product to be liquidated for liquidity, what do you think is missing for that to kind of
Right.
happen more often amongst more mining companies? What do you think the missing link might be?
Right. Yeah. I think I mentioned it a bit earlier that, hardware, really for mining companies, hardware and hash power itself, it's not yet very fluid or easily financeable, right? So I think on this front, we hope to see, I think a few, I think we need to see a bit more developments, such as, more flexible debt structures, right? So lenders being able to recognize Bitcoin as a strategic reserve rather than just that volatile asset that needs to be heavily discounted. I think we also need to see a bit dual collateral frameworks, right? So financing that looks at both ASICs and Bitcoin holdings together rather than, in isolation, because the ASIC fleets, produces the asset, which is Bitcoin, right? And then that asset supports hardware upgrades. And yeah, like I mentioned earlier, so making hardware and hash power more financially legible. So, the real frontier, I think, is really about making equipment and hash power themselves into assets that can be more flexibly financed, right? Transferred or remarketed, right? Because that's really a big asset or a big value proposition that mining companies bring to the table as the whole Bitcoin ecosystem kind of matures and develops.
Yeah, really cool. Yeah, and I expect that it feels like there's been quite a bit of maturation in that space of seeing Bitcoin as a collateral, getting increasingly interesting, competitive loan to value ratios and terms, although very niche. I suppose the kind of at that institutional level, it still is a ways to go. If you use like classic mining as an analogy, though, right? Of course, a company should be able to kind of use gold as collateral to get liquidity, and similarly, a company with a mining site and mining equipment or inventory in your case, right? I think that it makes sense that those things should be able to be collateralized for secured debt instruments. So I think this will be a fascinating space to see how that evolves over time, and then what implications that has for companies that want to hold more Bitcoin on their balance sheet as a result of the attractiveness of that decision. Cool. Okay, last section here before we wrap up. It'd be great to just hear your perspective looking ahead again into 2026 and beyond, I suppose. What's Canaan's longer term vision? Canaan, we might have discussed this a bit at the beginning, but like OEM for Bitcoin mining and digital asset mining hardware. You guys are also doing your own mining operations in some jurisdictions as well, and then expanding also this kind of Bitcoin treasury kind of arm of the business as well. So kind of quite diversified. But with that in mind, what's the longer term vision of the company now that it has these kind of multiple pillars?
Yeah. Yeah, I think for us, our long-term vision has always rested on two simple beliefs, right? One, Bitcoin only works if it continues to stay decentralized, right?
Mm.
And number two, that compute will have to become a native part of your energy systems rather than seeing it as separate. Right. And so
Mm.
from these two beliefs, we have our roadmap really has three simple pillars. One being, on the engineering front, we hope to continue maintaining our engineering leadership. So, that means, continue building machines that are not only, more efficient, but really about more resilience and more compatible with future energy systems and everyday environments, right? So from your large scale immersion cooling in data centers, to, quiet home heating devices that we use to heat our homes during colder seasons, right? Number two, I think it's another pillar for us is also about, integrating deeply with energy systems. So, pushing and we really believe that mining is this flexible demand layer that can be embedded in wind, solar, hydro, hydropower, hydrogen even, right? Storage and district heating ecosystems. And over time, in the long run, we believe that many sites will host mining today and will also to what we discussed earlier, host AI and other forms of high performance computing. Mining will often just be that first mover that makes those sites economically viable. And of course, our last third important pillar would then be this disciplined, conviction-based treasury, that financial strategy that should reflect the fact that we are, building for decades and not just quarters or different cycles. So for us, that's really our long-term vision and our long-term strategic pillars that we kind of move and guide our business.
Wow. Yeah, no, it's a very interesting and unique, I think, business out there in the space right now. And also, I think, interesting perspective on, your core beliefs about how the world will, the trends that will continue to kind of define the next decade or so when it comes to this particular industry and its integration with energy systems. I think this one, as I mentioned, has a kind of quite a positive perspective for both the Bitcoin network and for the planet in some ways, and for consumer energy prices and other things. So it's great to hear how there can be kind of a overall positive impact from Bitcoin mining, but also a really fascinating business model and strategy for a company kind of participating in that. So last question before we kind of wrap up, but what was one message you would like to share with CFOs or leaders of energy companies or infrastructure investors who are still seeing Bitcoin mining as something that is, risky, fringe, whatever negative connotation you kind of want to attach to it?
Yeah. I think I would say that mining today is no longer this, side bet fringe activity, right? That is speculative. It's becoming a lot more standardized, programmable industrial load that really can help you solve and real world energy problems, right? To miners, we're among the very few customers who can ramp up or down in minutes. We're willing to locate at the edge of your grid and we'll monetize your, curtailed or stranded energy. And we can help to de-risk your early years of, new energy generation projects. So instead of asking, do I believe in the Bitcoin price? Do I believe in Bitcoin as a whole? Perhaps the more useful question for a CFO or energy developers is really in my current energy mix or grid constraints or digital infrastructure plans, are there underused opportunities where a flexible compute customer could, improve your economics, right? If the answer is yes, then mining is not really fringe at all. It's simply just another tool in your toolbox of modern energy and infrastructure. And my gentle suggestion would be, to put aside labels and, look past memes, headlines, right? And really look at, mining at its core, right? So like I mentioned, you don't have to fall in love with Bitcoin. Honestly, it might not be the hottest. It might be a bit of a hot take coming from a Bitcoin mining company. You really have to fall in love with Bitcoin. I think Bitcoin in itself is so, it's a journey, right? Everyone started from somewhere. For myself or everyone else in this space. So I think you don't have to fall in love with Bitcoin in order to adopt, Bitcoin mining into your energy systems. Because for us, put us anywhere in your grid that might need help and I'll pay for my electricity, and we can take it from there.
Super cool. That's great. Yeah, I think as long as those preconceptions don't kind of act as firm barriers and people just look at the economics and see how it can be kind of brought in to improve the return on invested capital, I think that will get the attention of a lot of business leaders. I hope it does in any case. Very cool. So, coming to the end of this, Alicia, it's been great to catch up. Really exciting to kind of hear your outlooks on the market, what key trends are going to kind of evolve, Canaan's role within that, and its own kind of long-term vision and strategy for its business, which itself sounds very exciting, being kind of diversified into, OEM, mining yourselves, treasury strategy, and so forth. So it's been a really great conversation. I've personally taken away quite a few insights as well. So with that, I mean, for any of the listeners who want to maybe get in touch with you or learn more about Canaan or the company more generally and its own strategy, where can people find more about the business and get in touch with you directly?
Yeah, definitely. If you're interested in helping us, maybe if you're an everyday listener and you're interested in helping us hit that 20%, global hash rate coming from home mining, you can check out Canaan.io for our latest, products and just understandings about where we're at as a company in general.
Okay. And if people find you on LinkedIn, are you on X, any other social media?
Yeah. For myself, I'm on LinkedIn, but the company's on LinkedIn. We're easily accessible on all your traditional, non-traditional, I guess, social media platforms like Twitter, right? X, LinkedIn, YouTube, right? Social media, yeah. We're there. Telegram.
Super cool. Awesome. Alicia, it's been great catching up. Thanks so much for your time. Wish you a happy 2026. Which is only a few weeks away now, and hope to see you again soon in Q1.
Absolutely. Likewise. Take care, Ted.
Take care.
Happy New Year.